Hi there and good afternoon. My name is Ben Hush with the National Conference of State Legislatures, Natural Resources and Infrastructure Committee. I'd like to welcome everyone to today's webinar on implementing the 2014 Farm Bill and what it means for states. As a reminder, today's webinar is the third in the NRI Committee's 2014 e-learning webinar series. Our next webinar will be next Thursday, May 22nd, also at 3 p.m. Eastern, focusing on the Toxic Safety Chemicals Act, currently making its way through Congress. For additional details on our e-learning webinar series, please visit ncsl.org. But back to the Farm Bill. Today's webinar will feature a number of great presenters who will be providing an update on the implementation of the 2014 Farm Bill. Our first group of speakers come to us from the United States Department of Agriculture. And while we can't cover everything that USDA does on implementing the Farm Bill, I'd like to welcome Sarah Scanlon, Deputy Director of External and Intergovernmental Affairs, Katharine Ferguson, Chief of Staff, Rural Development, Martha Joseph, Special Assistant to the Deputy Chief for Programs, Natural Resources Conservation Service, Stephen Peterson, Branch Chief for the Program Policy Branch at the Farm Service Agency, and Lilia McFarland, New and Beginning Farmer and Ranch Program Coordinator. As a reminder, we will hold a question and answer session following the final presentation. For those joining us via the web, please feel free to use the chat box in the lower right part of your screen to submit any questions ahead of time. And with that, the floor is yours, Sarah.
Thanks, Ben. Good afternoon, everyone. Just want to say a quick thank you to NCSL, Ben and his team for inviting USDA to participate today and giving us this opportunity to share some of the highlights on the Farm Bill implementation. As you're already aware, on February 7th, Congress came together to pass a long overdue 5-year Farm Bill. The Agriculture Act of 2014, also known as the Farm Bill, will remain in force through 2018, and in case of some provisions beyond 2018. Hard work remains. However, here at USDA, our agencies are currently in the midst of implementing new and revised farm programs. The Farm Bill makes major changes in commodity programs, adds new crop insurance options, streamlines conservation programs, modifies some provisions of the SNAP program, and expands programs for specialty crops, organic farmers, bioenergy, rural development, and beginning farmers and ranchers. The new Farm Bill builds on historic economic gains in rural America over the past 5 years, while achieving meaningful reform and billions of dollars in savings for the taxpayer. USDA's Farm Bill implementation team is composed of key sub-cabinet officials and experts from every mission area of the department. Some of those experts are on the working team are joining us today, and in a moment we'll be updating you all from their respective agency. Through outreach and listening sessions, we are sharing information and hearing from stakeholders such as yourselves. Announcements will continue on new agriculture research partnerships, conservation, nutrition programs, and other Farm Bill provisions will be made in the coming weeks and months. To date, we've made important progress on every title of the Farm Bill, including updates to risk management tools, modifications to farm loan programs, announcements regarding available funds for agriculture research, disaster relief to farmers and ranchers, and much, much more. This afternoon, each presenter will spend a few minutes to update you on the implementation process of some of the Farm Bill titles, and we welcome any input from the group after the full presentation. Joining me from USDA in order of their presentations, we have Katharine Ferguson from Rural Development, Martha Joseph from Natural Resources and Conservation Service, Steve Peterson from the Farm Service Agency, and last but not least, Lilia McFarland, the New and Beginning Farmer and Rancher Program Coordinator. So as we move to the next slide, I'd like to turn it over now to Katharine Ferguson for her portion on the implementation of the Rural Development Agency. Katharine?
Thank you, Sarah, and hello, everyone. It's a pleasure to join you this afternoon, and I really appreciate your taking time to learn a little bit more about the 2014 Farm Bill. Rural development is one of the major mission areas or branches here at USDA, and rural development works directly with communities. We do some work with farmers, but really primarily we focus on communities, small, very rural, often remote, and often very poor communities across the country. Rural development does work with businesses, with municipalities, with nonprofits, and all kinds of institutions, really focused on how to create a strong economy that can help create places where people want to live and raise families. The tools that we have available are loans, loan guarantees, grants, and technical assistance. And those are available for rural utilities service development things like water, electric, and telecom broadband infrastructure. We also do a lot of financing for housing is a huge part of what we do, and then also, again, a lot of support for business development. Next slide, please. The 2014 Farm Bill primarily reauthorizes the authorities that rural development uses to operate programs. The key authorities authorized in the Farm Bill are for our Rural Utilities Service and our Rural Business Service and Cooperative Service programs. The housing programs are authorized in a different committee under different statutes. But very important, we were very happy to see this Farm Bill pass because it enables us to continue doing what we do and do well. But there were also some key changes I would like to highlight for all of you that may be of interest. Specifically, we have a new authority that enables, the Secretary has a new authority that enables him to prioritize applications that are part of a regional or multi-jurisdictional economic development plan. This is part of, in line with an effort here at the department to make sure that when we are providing funds to applicants, that really we're making long-term investments, not just loans and transactions, but really investments in long-term economic growth, strategic growth. Additionally, the Farm Bill provided some mandatory funds for rural development, specifically in the rural development and the energy titles of the bill. One of those key provisions was $150 million for water and wastewater funding, specifically for a backlog. We've already been able to put that money out the door, one of our key accomplishments thus far. That $150 million in grants turned into $400 million in grants and loans, and that financed 116 water, wastewater projects in 40 states and one territory across the country. That was something that the Secretary announced on Earth Day of this year. Other things that this Farm Bill does include providing funding for many of the energy programs. Specifically, the Renewable Energy for America program is provided $50 million a year. That program is for really energy efficiency upgrades, and also funding for bio-based products and bio-based product manufacturing. There are significant changes to this particular program that will enable more financing of loan guarantees for bio-based product production and producers across the country, something the Secretary is certainly very interested in and with great potential in rural communities. Next slide. And if you are interested in more information, you can find it online. We have a good write-up of many of the things that we've been able to do thus far and what else, the rest of the different provisions in the rural development title. I really encourage you to explore rural development as a tool for your communities. We have lots there for you and really hope you will engage. And I'll turn it over to the next presenter with that. Thank you.
Great. Can we move to the next slide?
Good afternoon, folks. My name is Martha Joseph, and I'm from the Natural Resources Conservation Service. And as you may be aware, the Farm Bill consolidated 23 of our conservation programs into 13, thus strengthening the tools that we have to protect. Streamlining the programs will provide our producers added flexibility and make it simpler for them to understand and for our field staff to implement. We are very pleased that the Farm Bill continued very robust funding for our conservation programs. We believe that this represents a very strong commitment to the work that we are able to do with our producers and with our partners. Among the things that the Farm Bill did is it continued our ability to work on working lands. Our most popular program is our Environmental Quality Incentives Program. And under our program, which is also known as EQIP, we work directly with producers to implement conservation practices on the land. And the Farm Bill has us funded on an annual basis for over $1 billion. Our other very popular program is our Conservation Stewardship Program, where we work with producers to continue implementing practices in their stewardship responsibilities that they have already implemented and to adopt new conservation practices to enhance even more the benefits that we're getting from these working lands. Even though the authorization was cut down from a 12.7 million acre annual enrollment to 10 million acres, NRCS currently has nearly 60 million acres enrolled in CSP, and so the 10 million acres additional that we enroll each year represents a very strong commitment to the stewardship efforts of our producers. We also have a conservation easement program where we get to work both on working agricultural lands and also to help restore and protect agricultural wetlands. And this is our agricultural conservation easement program. Our program, named ASEP, consolidates our former conservation easement programs of Farm and Ranch Land Protection Program, Grassland Reserve Program, and Wetlands Reserve Program. And by this consolidated program, we are able to streamline our implementation and the services we're able to provide. Currently, under our agricultural land easement component of that program, where we work with states, local governments, and nonprofit organizations to assist them with the purchase of conservation easements, we are currently having our sign-up and accepting applications from eligible entities, and that sign-up will go through June 6th. So if you're interested in participating as an eligible entity, you would contact our state conservationist, who is our agency representative in each of the states. And there's more information on the website that we'll provide you a link to at the end of the presentation. The Farm Bill also represented for us an opportunity to protect valuable wetlands and grasslands. One of the most significant changes that the Farm Bill did was that it linked our conservation compliance provisions to crop insurance payments. Our conservation compliance provisions are where we require producers who receive certain benefits from USDA to protect highly erodible lands through the adoption of a conservation plan and to not convert wetlands to agricultural use that had not been previously converted. NRCS is the technical arm for conservation compliance, and we're working in conjunction with the Rural Management Agency and Farm Service Agency to develop regulations, and they may provide you more information on that. In addition to conservation compliance, as I mentioned before, there's our wetland reserve easement component of ASEP, where we protect agricultural wetlands, and it also provides expanded eligibility under ASEP to protect grazing lands and grasslands. One of the most exciting opportunities that we have found is the consolidation of our partnership programs into the new Regional Conservation Partnership Program, which is funded at $100 million per year plus a reservation of 7% of our other conservation program funds to provide a pool of funding opportunity. Under RCPP, we work with states, local governments, non-government organizations, Indian tribes, and others who wish to assist in a project area to work with agricultural producers to address resource concerns in that project area. There are 3 funding pools under which a partner can compete for funding. 40% of the funds are used to select projects nationwide. 35% of the funds are used to select projects in what are called critical conservation areas, which are areas that are designated by the Secretary. And 25% of the funds are allocated to projects that our state-level personnel select within that state. We believe that RCPP provides us not only the ability to strengthen and deepen our relationship with existing partners, but to expand the partnership network to partners that we may not have worked with in the past, to increase the conservation implementation network that's available to agricultural producers. Under all of our conservation programs, we have the ability to increase our assistance to historically underserved producers and veterans. In our EQIP and CSP programs in particular, there are special funding pools set aside for projects that are with historically underserved producers. We believe overall the Farm Bill provides us an opportunity to streamline, to ensure that we have an efficient conservation delivery mechanism to address the large natural resource issues that we have been facing on into the future. And if you go to the next slide, you will see the website where there are a number of fact sheets available about each of the programs and opportunities to participate. Currently, we have a notice out for the Voluntary Public Access Habitat Incentives Program, where we accept proposals from states and Indian tribes who wish to expand public access on private lands for recreational hunting and other purposes who have those programs. And that deadline is June 16th. So look forward to the opportunity to work with any of you as partners. And with that, I would like to turn it over to the Farm Service Agency, which I believe is next on the agenda.
Thank you, Martha. This is Steve Peterson. The Farm Service Agency had major impacts with regard to the 2000 Farm Bill in the sense of adding new programs, modifying current programs, reauthorizing programs. But the programs I'm going to speak to you today about really are just the 4 disaster programs that we recently rolled out the door on April the 15th. These 4 disaster programs were initially authorized under the 2008 Farm Bill. They were the Livestock Forage Disaster Program, Livestock Indemnity Program, Emergency Assistance for Livestock, Honeybees, and Farm-Raised Fish, and the Tree Assistance Program. Next slide, please. The 4 permanent disaster programs authorized under the 2014 Farm Bill are now considered permanent disaster programs. Under the 2008 Farm Bill, those programs only ran through September 30th of 2011. In addition, these 4 permanent programs, because of them expiring on September 30th, 2011, they actually start covering losses beginning October 1st, 2011. So as you can see, that second bullet on my slide there is incorrect. It shouldn't be October 11. I've got an extra 1 there. It's actually October 1st of 2011. Next slide. To go through each program specifically, the Livestock Forage Disaster Program covers grazed forage losses due to drought and wildfires. This program is triggered using the U.S. Drought Monitor and recognizes the triggers are based on a D2, counties that have a D2 for 8 consecutive weeks, a D3 at any time of the year, a D3 for 4 non-consecutive weeks, a D4 at any time, or a D4 for 4 non-consecutive weeks. And ultimately what this program does, it pays a month payment based on the varying levels of drought condition that's recorded on the U.S. Drought Monitor. And those months of assistance can go from a 1-month, 3-month, 4-month, or 5-month payment. The Livestock Indemnity Program covers livestock deaths due to the natural disaster, and one of the biggest things that we know happened recently were the blizzard that we had up in South Dakota. Many livestock suffered losses there, and as a result, this program will help cover those livestock deaths that occurred as a result of that. Next slide. The Emergency Assistance for Livestock, Honeybees, Farm-Raised Fish program is basically a catch-all program, in the sense that it comes in and it covers losses for areas in which the Livestock Forage Disaster Program doesn't cover, or the Livestock Indemnity Program doesn't cover. It can cover grazing losses, associated to causes other than drought and wildfire. It can cover losses of purchased feed that are stored on the farm. It can also cover increased feed costs as a result of disasters that are occurring that are making producers have to pay more money as a result of those disasters. It covers transportation of livestock and feed. In the event we need to get feed to livestock because there's a lack of feed. Also, the transportation of water is also covered under the emergency assistance for livestock and honeybees and farm-raised fish. In addition, it covers disease, and one of the programs it covers or areas it covers is the gathering of livestock due to cattle tick fever. Ultimately, it covers those costs associated to gathering livestock for them to be treated. Next slide. The Tree Assistance Program provides disaster assistance to eligible orchards and nursery tree growers to replant or rehabilitate trees, bushes, and vines that were lost or damaged because of an eligible natural disaster. Basically, this program is a cost-share program, and ultimately, if a producer suffers loss, will cover up to 65% of the cost to replant trees, or 50% of the cost to rehabilitate trees, or for the removal or debris removal or site preparation for replanting. Now, one of the criteria for the Tree Assistance Program is the fact that a producer must suffer a 15% mortality due to the natural disaster before the program will be available for participation for producers to participate in. Next slide. The application period, applications began on April the 15th of 2014, and those were to cover those retroactive losses from 2011 through 2014. As I indicated, these programs are permanent, and so for 2015 and subsequent years, producers, when losses occur, will be able to come in at any time throughout the year to file a notice of loss or an application for payment. For the application ending period for LFP, LIP, and TAP, it's January 30th of 2015 for producers who are applying for retroactive losses occurring 2011 through 2014. For ELAP, because the crop year is somewhat different than the LFP, LIP, and TAP, ultimately they have for 2012 and 13 until August 1st of 2014 to apply for assistance for 2012 and 13, and then November 1st for 2014. For subsequent years, ultimately, ELAP, you'll be able to file an application for payment based on that November 1 date in a subsequent year. So, for example, for 2015 losses, producers will have to come in by November 1st of 2015 to file an application. Next slide. Lastly, what I wanted to do is share the sign-up activity we've had basically since May 8th. Or as of May 8th, these numbers provide our sign-up activity. So within less than 30 days from the beginning of sign-up, FSA has taken 46,998 applications for LFP, 1,432 applications for LIP, 69 applications for TAP, and because ELAP has such a wide array of activity in areas that they cover under the program, ultimately we really don't have the number of applications we're taking on ELAP because it's currently a manual process rather than an automated process, so that data is not as available as the other three programs are. With regard to dollars paid already for LFP, for 2011 through 2014 losses for LIP, or LFP, excuse me, is $43.8 million. For LIP, it's $2.7 million. And the reason why TAP and ELAP are not listed is because TAP, with it being a cost-share program, once producers apply, they must complete the practices before we're able to reimburse them. So obviously they haven't had the opportunity to actually complete those practices on TAP, so we've not paid any money out on TAP. ELAP has a limitation of $20 million a year, and so ultimately, based on the amount of participation we have to wait until the end of the year, until all sign-up is received, before we're able to determine whether or not we either meet or exceed that $20 million limitation. If we do exceed the $20 million limitation, then funds are factored accordingly so that all producers will receive benefit based on a percentage of the total dollar amount. That is the presentation that I have. With that, I will turn it over to Lilia to go over New Farmer and Rancher.
Hi, everybody. This is Lilia McFarland. You guys have heard a lot today about our work on building healthy rural communities, conservation, disaster assistance. What I'll add is an overview of our focus on new and beginning farmers and ranchers, and then hit a couple of the programs that others haven't covered. Bottom line, USDA is engaging all of our resources to support the next generation of farmers and ranchers. We're supporting access to land and capital, building new markets and market opportunities, extending new conservation opportunities, offering new and more appropriate risk management tools, and increasing our outreach, education, and technical support for new farmers. We've made improvements to our existing programs to create better access for new farmers, and we're working to do more as we implement the new Farm Bill. We're also looking at how we communicate with the next generation, working to make our communications more effective and more personalized. Under one bucket, access to land and capital, the Farm Bill made some really significant strides forwards in terms of access to credit. The 2014 Farm Bill expands lending opportunities for thousands of farmers and ranchers to begin and continue operations, including greater flexibility in determining eligibility, raising loan limits, and emphasizing beginning and socially disadvantaged producers. USDA has already implemented many of these changes, including the elimination of term limits for guaranteed operating loans, increasing the maximum loan amount for direct farm ownership loan down payments, and increasing the guarantee amount on conservation loans. The Farm Bill also increases funding for a program called the Conservation Reserve Program Transition Incentives. And basically what that program does is facilitate the transfers of Conservation Reserve Program land enrolled in an expiring contract from a retired or retiring farmer to a beginning or socially disadvantaged farmer. This program has been really important in the past for helping folks who want to farm get connected with farmland. And the new Farm Bill increases the amount of money available under that program from $25 million to $33 million. The Farm Bill also helps build new markets and grow opportunity for new farmers and ranchers. USDA has been doing a lot of work in building local and regional food systems and direct marketing ventures. We've got a couple of programs that are really important in this bucket. Value-added producer grant programs, which can basically help you, if you've got a cucumber farmer, it can help you make pickles. And it's a program that's pretty important for obtaining funding for that kind of work. The Farmers Market and Local Food Promotion Program, which was announced and has $30 million available until expended in FY14. The Specialty Crop Block Grant Program, which will announce $72.5 million availability. And the National Organic Cost Share Program, which has $11.5 million available in 2014. That's a program that helps new farmers and ranchers with the cost of getting certified as organic. Another thing that I would flag for you guys is some of our outreach dollars. We have, through the Beginning Farmer and Rancher Development Grant Program, we are accepting applications under that program through June 12th. That is a really important program for helping organizations that work with new and beginning farmers. I would encourage anybody who's interested to direct their constituents to apply. And risk management. We're also making some pretty significant strides through the Farm Bill towards more appropriate risk management tools. The Farm Bill provides better crop insurance for beginning farmers and ranchers for those who have farmed for fewer than 5 years. The changes include exempting beginning farmers from administrative fees associated with catastrophic policies, accessing premium assistance for insurance programs, allowing beginning farmers to use production history of entities that they were working for or with as part of their loan assessment in certain circumstances, and adjusting requirements for yield failure in beginning farmer operations. Lastly, the Farm Bill also strengthens the non-insured crop disaster assistance program. These are for those crops that don't necessarily have traditional crop insurance available. A lot of your specialty crops like, fruits, vegetables, nuts, things that aren't typically covered. In that program, we'll be able to reduce premiums on buy-up level coverage by 50% for new and beginning farmers and be able to waive their application fee. With that, I'll turn it over to Ben and welcome any questions you guys might have.
Thank you, Lilia. And just a quick thank you to Stephen, Martha, Katharine, and Sarah. Those were really extremely informative presentations. I'd like to introduce our second speaker, Nathan Bowen, who is going to highlight some state-specific agricultural issues. Nathan is the Director of Public Policy at the National Association of State Departments of Agriculture, or NASDA for short. NASDA represents the commissioners, secretaries, and directors of the State Departments of Agriculture in all 50 states and 4 U.S. territories. He is responsible for managing the association's activity related to environment, conservation, resource management, and pesticide policy. With that, the floor is yours, Nathan.
Thanks so much, Ben. It's nice to be with you all this afternoon. I think over the past couple years, we've had the opportunity to talk a few times on webinars like this about the legislative debate on the Farm Bill, and so now it's nice to be able to turn our attention to implementing the Farm Bill. I wanted to highlight a few issues today. Some of these were mentioned earlier by presenters from USDA, but I thought I'd call out special attention to them. The first program that I wanted to mention that is important to state departments of agriculture, it's important to state agencies around the country, is the Specialty Crop Block Grant Program. That's an exciting program that has been a NASDA priority for the past several farm bills, and we were excited this year that there were significant extra resources devoted to that program. The money is block granted from USDA to the states. State departments of agriculture are then working with their specialty crop industries to provide this funding to promote specialty crop industries in the various states. A few things with this program that I think are important to mention are that the formula was changed this year and how the funds were allocated between the states. And that's led to some changes in various states. Some states have seen tremendous increases in the amounts of money coming through this program. One state saw a reduction, unfortunately, in the money that's coming through to their state, but on the whole, most states saw an increase. And that's due in whole to an increased funding for this program. There were, I think, as the allocations came out this year, there were about $66 million that have been allocated this year to the program. Over the next 5 years, that will grow quite significantly. The one issue that we're looking at closely with this program, and I encourage you to take a look at as well if this is something that's on your radar, are new provisions that allow multi-state grants to go forward. States had been able to partner together to do multi-state grants before. It was somewhat cumbersome, and there weren't very many of those that were done. But the bill this time around provides set-aside money for those multi-state programs. So that is an area that could be interesting to watch, and there could be some exciting things in the specialty crop world. One of the other issues that I wanted to touch on involves conservation programs, and we heard a little earlier from NRCS about their good work in implementing some of the changes to the conservation programs. Those are very important for not only producers but also for state agencies. In a lot of states, we're looking at increased regulatory requirements, things of that nature. And these conservation programs are very important to helping producers meet those requirements. There have been a number of changes that are of particular interest to states. Two that I want to specifically highlight are the easement programs. The Ag Land Easement Program and the Wetlands Easement Program have kind of been merged into ACEP, the Ag Conservation Easement Program. They will still have separate sub-programs focusing on land easements and wetlands easements. Historically, these easement programs are modifications of some existing programs that have been in existence at USDA for a number of years. You may be familiar with the FRPP, the Farm Ranch Land Preservation Program. In a number of areas, states are very active in that space. There are state easement programs that have been working cooperatively with these the old FRPP program. One of the issues that we're going to be looking at very closely as implementation proceeds is to make sure that states are able to participate in that program fully. There have been some challenges with the previous program to allow states to work to the fullest extent of the program. So we'll be working closely with NRCS on those as the programs get kind of implemented. The other area that we also want to really highlight, and I think this is an exciting opportunity for state and local governments, local organizations, really dealing with the Regional Conservation Partnership Program. And you heard a little bit about that program earlier in the presentation from NRCS. It's an exciting program that I think will really bring together people in various regions around the country to really look at these conservation issues, look at approaching them cooperatively. And I think there can be some resources leveraged there that could really bring some exciting conservation programs to getting stood up on the ground. One of the things with that may be of interest to you specifically, the RCPP program has within it these critical conservation area component where there will be, I believe it's up to 8 regional areas across the country that are designated as critical conservation areas, and will have kind of have additional resources available. And I know there are a number of areas around the country that are looking at that and are trying to, kind of angling for that designation. So that might be something that would be of interest to you and your individual state. I want to move on just a little bit to some other issues. We heard from FSA about the disaster programs. There are a number of new or changes or new programs within the kind of the traditional farm safety net. There are new commodity programs. There are tremendous changes to the dairy program, as well as changes to the crop insurance programs. And so those are areas as USDA implements those changes that we'll be watching closely. I know a number of ag organizations will be as well, but you may hear from producers about those programs, so just be aware that there are some pretty big changes there if you're not aware already. A couple other programs that I wanted to mention very quickly, and these were touched on earlier as well, but there's certainly a state angle to some of this. One is the Food Insecurity and Nutrition Incentives Grants Program. That's not an area that NASDA specifically has worked in, but I know that there are state agencies out there that are looking at that program. It provides matching funds to organizations to basically enhance the ability of SNAP beneficiaries to buy fresh fruits and vegetables. So a number of local foods type organizations are looking at that, nutrition community organizations, state health agencies. So that might be a program that would be helpful for you to take a look at if that's of interest. And the other is the Farmers Market and Local Foods Promotion Program, which we heard a little bit about earlier this afternoon. Finally, the last kind of Farm Bill implementation highlight that I wanted to mention today is one that we at NASDA have been hearing a lot about from our members in recent months. I know it's one that kind of gets some press attention as well, but there was language in the Farm Bill that addressed industrial hemp. I know in a number of states that's a big issue, and there were provisions that would allow institutions of higher education, universities, and state departments of agriculture to cultivate hemp for research purposes, as long as it's done within certain parameters and it's allowed under state law and things of that nature. There are a number of states, as you are probably aware, that have been looking at industrial hemp. There are likely going to be some issues with this provision. I've seen some issues with this in Kentucky just today, actually, where there are problems getting seeds into the states, and so that will be an area. If this industrial hemp issue is one that's big in your state, that might be something that you hear from folks on, and so I just wanted to kind of pull that out and highlight it as well. Those are the highlights that I wanted to make today. I appreciate the opportunity to be able to be with you all, and more than happy to answer any questions that you may have, and look forward to continuing to work with you all.
Thanks, Nathan. That was really helpful. I'd now like to open things up to the audience. If you have any questions, please feel free to submit your questions via the chat box in the lower right-hand portion of your screen. Nathan, actually, one question I got, I'll just go right to you. You mentioned the Specialty Crop Block Grant. Could you just maybe take a minute and define what a specialty crop might be, or what the list includes?
Well, as soon as I start making a list, I'll leave something off. Essentially, specialty crops are crops that aren't program crops. They're not your, corn, wheat, rice, the crops that have traditionally had programs available under the Farm Bill. Some examples of specialty crops include fruits, vegetables. You'll see things like tree nuts. Honey is a specialty crop, and I guess I said fruits and vegetables. That's a fairly large category there. Mm-hmm. And if there are specifics, we can get an answer to you on what's in and what's out.
No, I think that was really helpful, just to kind of identify the differences between kind of what is or what's likely to be a specialty crop versus something that's in a program. Another question that came in during the presentations is actually from Martha. And this was a question on the EWP program and how that might receive funding. So I was just wondering if you could, shed some light on that.
EWP is our Emergency Watershed Protection Program. Is a program where we respond to watershed impairments that occur after natural disasters such as hurricanes, tornadoes, severe flooding. We're not funded under EWP through the Farm Bill. We receive our appropriations through emergency supplementals as events rise and Congress makes those funds available, our most recent being, of course, Hurricane Sandy.
Great, thank you. Lilia, this next question is for you, and this actually came in ahead of time. And we get this from a number of our members kind of throughout the year, and it's really just kind of what states can do to boost participation in these new and beginning farmer and rancher programs.
That is an excellent question. Lilia McFarland, the recommendations that I have for folks who are looking is to connect with your local USDA staff, and there are a ton of organizations who are out in the countryside who are doing a lot of this work. So there is a tremendous network kind of already in place to help support folks who are interested in farming. And I would connect with the folks who are sort of in your communities, connected with new farmers, and I work with them on what outreach events could be appropriate. Talk to them about what resources are available. If you've got constituents who are coming to you with questions, we at USDA are always happy to help. We have a very focused approach as a department, and we're working to be one-stop shopping for folks who have questions. And I'll make sure that my contact information is available to everyone on this call as well.
Great, thank you. And Martha, not to pick on you, but I think we just got another question that's directed at you. Regarding the Farm and Ranch Lands Protection Program, and just has the program been changed to allow more state flexibility in the use of the funding?
The FRPP was one of the easement programs that was consolidated into the Agricultural Conservation Easement Program. It's now under the new name to refer to FRPP-style efforts would be the Agricultural Land Easement component of ASAP. We have been given some flexibility to work with states. I'm not sure what kind of flexibility was being considered, but in the area of what we would use to determine the agricultural value, fair market value of the easement. The Farm Bill provided us additional flexibility of methods to consider that could be used for determining that fair market value. And that would be how much money we would be able to provide to a state to assist them with the purchase of a conservation easement. It's all based on fair market value of the easement.
Okay. Stephen, I actually had a personal question for you, just to make sure I was understanding some of the disaster programs correctly. You were mentioning that loss coverage, or I guess, was available for going back to 2011 should farmers or producers have faced some type of difficulty between now and 2011. Is that correct?
That's correct. As I indicated, the prior Farm Bill, 2008 Farm Bill, for those 4 disaster programs that were authorized expired on September 30th, 2011. And so the 2014 Farm Bill reauthorized them beginning on October the 1st, 2011. So you're absolutely correct. Producers can come into our county offices right now and apply for losses that occurred in due to disasters that occurred after October 1 through December 31 of 2011 for all of 2012, 2013, and losses up to current day in 2014.
Great. Okay. Thank you. Nathan, going back to you, you mentioned this, and I know we didn't really, focus on this as a specific topic to cover, but since we have a minute or two, you mentioned some significant changes to the crop insurance programs, and I mean, I guess I am putting you on the spot, but I didn't know if you might be able to just kind of maybe give a little bit more of an explanation as to what those were.
You are putting me on the spot. So the safety net programs are ones that we haven't, and crop insurance and safety net programs are ones that we haven't actively been engaged in on the lobbying side or anything of that nature. But there have been changes to the crop insurance program. One that I would mention is the availability of a new supplemental coverage option, which allows farmers essentially to buy up increased coverage. That will be a program that I think will be appealing to a lot of folks. There were other changes with crop insurance that also are going to be impactful to a certain segment of folks. With the demise of direct payments, with those going away, those kinds of, for participants who would participate in direct payments, there was conservation compliance requirements. Those have been extended, those conservation compliance requirements have been extended to participants in the crop insurance program. That was decoupled back several farm bills ago, but it's been reattached to the crop insurance program. So those are, I guess, 2 areas that I would highlight on the crop insurance side. There are also some provisions that would kind of look at trying to get some insurance products to crops that aren't currently covered.
Great, thank you, and sorry for putting you on the spot there. Seeing no more questions in the chat box, I do want to conclude today's webinar on the implementation of the 2014 Farm Bill. I would once again like to thank all our speakers from USDA and Nathan from NASDA. For those that joined late or for those that would like to listen again, NCSL will be posting a replay of today's webinar online early next week. As a reminder, our next webinar in our 2014 e-learning webinar series will be held next Thursday, May 22nd, also at 3 p.m. Eastern. For additional details and to register, please visit ncsl.org. Thank you again and have a great day.